Hi folks, this is Mrin Agarwal back again with another NFO review, the Navi Total Stock Market FOF, which basically tracks the largest ETF in the world, which is the Vanguard Total Stock Market ETF, which follows an index known as the CRSP US Total Market Index. So what is this index all about? Well, it pretty much has 100% of US allocation to pretty much all of the US stocks. It's got about 72% in large cap, another 20% in mid caps, and small caps is around 6%. In terms of the total holdings, you have Berkshire, you have UHG, JP Morgan. In terms of percentage allocation to sectors, there's 29% allocated to technology, about 16% to consumer, 13% to healthcare, and about 11% to finance. So this index and this fund, the Vanguard fund, of course, is very well known world over to be a diversified fund. It's extremely low cost. The fund cost is only 0.03%. And when you look at the costs that are being charged by Navi as well, the costs are pretty low at 0.06%. So overall, very, very low cost. So should you invest? What works for Indian investors over here is that they are getting access to 100% of US stocks. If you look at the S&P 500, they're the top 500 stocks by market capitalization, whereas this fund has 4,000 stocks. But that itself is a disadvantage because 3,000 of the stocks that are there are actually such a small holding that even if they were to do really well, they're not going to have such a great impact on the fund's overall performance. Further, this CRSP index is used only by Vanguard. It is really not used by any other ETFs in the US. So to that extent, it seems to be an index which seems to have been made only for Vanguard. The returns are pretty close to the benchmark. So my take, well, firstly, if you already have exposure to US markets, whether it is through S&P 500 or even NASDAQ, I would not recommend you to invest into this fund at this point. That's due to a couple of reasons. One is I think it's a little too over diversified. But more than that, just the lower expense ratio should not be a reason for you to invest, because as we have seen in the past, that lower expense ratio does not mean lower tracking error. So I would think that it's better to wait for at least 6 months, look at what is the sort of tracking error that the fund has got, and on that basis then decide whether to invest. Certainly, as I said, if you've already invested in a S&P 500 fund, please do not invest because there is a huge overlap. Secondly, wait for the tracking error to come out post 6 months and then basically decide. The other thing that actually worries me is also that the fund manager of this fund has only 6 years of experience, and we don't know how deft he's going to be at being able to manage this particular fund. That remains to be seen as well. So as of now, I would not recommend you to invest into this fund. Make sure you click on the bell icon to subscribe. We do look forward to your feedback. Till then, bye-bye.